Hey, Lynette, Georgina should be
No
you.
worries. Just want to make sure we are all set and in. And then I can pass off hosting rights to her because she'll share her screen.
Yeah, I gave her the heads up and she's good with that.
Amazing. Cool. Be right back.
Okay.
Also, we loved Ornella. She was amazing.
Oh, good. Yeah, she had a great time doing it.
Oh, good. We've got so many great commentaries from the bartenders and people that joined. So it was really good. We're really happy.
Yeah, I figured when we were talking, I thought she'd be perfect for that just because she, did own her own restaurant. So kind
100%. I was like,
Yeah.
oh man, you kind of know everything we're going through.
Yeah, she gets it. We felt obviously terrible for her when she had to close it and everything, but
it's the worst.
yeah.
It's such a weird time.
Yeah. So how many did you guys collect signups for this? Do you know how many people?
So let me take a look. And we just reteased it. I know there's been a lot of people who asked about it. So let me just go into my Eventbrite. Here we go. Live events. We have about 20 RSVPs, which I'm sure more will come. Most
Okay.
people just kind of, yeah, that's pretty good. Actually, it's a high number for for this group. Bartenders tend to be very last minute. But I did just tease it again in the link on our social.
Cool. Let me just Slack Georgina and see if she.
Yeah, and we'll give people a minute to hop in, so it's not.
I did block her calendar before this, but she may have tried to sneak in a client quickly.
Yeah, no worries. It's been busy. I know when we were on with Bridget, she was so booked.
Yes, yeah. Bridget's
She was great.
been very crazy lately.
She's perfect for us. My husband and I really love her as a trainer.
Oh, good. Yeah. Bridget's the best. Just sent her a Slack message.
Yeah, no worries. I am not worried.
Okay. So what other programming do you guys have for the rest of the month?
We have an invest and imbibe session. So we will have people joining in to learn how to approach investors, which is fun. That's the 25th at like 5 p.m. We have a career change workshop, which has been a big thing for a lot of people in our industry, or adding something to it. So that's coming up with like breakout rooms, and this woman named Lauren Moses, who's a Duke University graduate, she's leading that. So it's going to be a really cool workshop for anyone who's just thinking about change, how you approach change, what are the things. And then we have one called Sip and Social, which are 5 different business owners who have started, they're bartenders primarily, and they started different businesses during the pandemic that are all tied into kind of social movements. So one woman in Atlanta, she actually started it's called a Sip of Paradise, and it's community gardens. And so she has been basically people in restaurants and bars can come and grab a plot and grow their own herbs and things for their cocktails. And then she's really working with a bunch of she's working to also get seeds and then also have more plots for people to use in BIPOC owned farms. So it's a really cool initiative. And then one of the women she was actually using one of her programs in San Antonio. She was making cocktail mixers and used that to help raise funds to help out of work undocumented workers and provide meals. And so it's really cool just to see what people did and how they leveraged community to build their businesses too, which was nice.
Yeah, that is cool.
Yeah, a lot of clever speed rackers out there who've done really cool things during this time. Hi, Portia, welcome.
Good morning. Thank you. I'm happy to be here.
Great. Or it's afternoon now. I guess we have this set at a time for everyone from West Coast to East Coast and beyond to be able to attend, even some of our European folks who get to watch this in the evening.
Where are you located?
I'm in New York.
Okay. Yeah. So it's definitely afternoon. It's morning still. I'm like, good morning.
And we'll let everyone kind of hop in and we'll get started in a little bit. Hello, everyone just joining us. We are going to let everyone hop in and we will get started in a few minutes. Just as a little housekeeping, if anyone has any questions, please pop them in the chat. I will be making sure we can get them to our financial trainer.
Lynette, Georgina just hopped in, so you can
Oh,
go
great.
access whenever.
Awesome. There we go. All right. See you, Georgina. Fantastic. You are getting all of the responsibility now. We're going to give everyone some time to hop on in. Welcome everyone who's joining us. We are just waiting for a few more of our registered guests to hop on, and we will dive into this awesome presentation from the financial gym. And just for everyone's purposes, just know we can pop questions in the chat as they come up, and we will answer them. All right, everyone, just giving people a few more minutes and we will get started in just a couple with our introductions. All right, everyone, we're going to go ahead and get started while people roll in. My name is Lynette Marrero. I am one of the co-founders of SpeedRack. This is our Women's History Month programming, She Persisted. And this month, we really wanted to think about and support issues that we thought we saw really throughout this year through the pandemic that were really affecting women. And one of the big conversations we thought about was the conversation around finances, our personal finances, how we get started, as gig economy people, typically the restaurant industry was hit really hard, and thinking of how we better protect ourselves in the future for moments of crisis or ups and downs of our income, we thought was really important. But in addition, many of you were extremely creative and started new initiatives and new companies. And a lot of the information that is going to be presented today is a lot of information I wish I had when we were first starting things like SpeedRack and my own companies. And so I thank you all for joining and being a part of this. The Financial Gym is actually an organization that I met a few years ago when we were working with the Bacardi group with the She Summit. Samantha Katz, who is one of the, she's incredible. She's going to be doing our investor panel in a couple of weeks. She knew the founder, Shannon McClay, and brought her on board and her team to kind of have these conversations with all of us to get more comfortable about thinking about our future, our finances, and talking about money. So that has led to a great relationship with the Financial Gym. I personally am signed up and working with them, and I find them to be an incredible group to ask all the fit questions that I would be afraid to ask anyone else. So please, if you have questions, there's no stupid questions, pop them in the chat. We will be able to ask, and I'm really excited for this presentation. And we have Georgina Murray, who is our host today, who is one of the trainers and who will be taking us through this. So welcome, Georgina.
Thank you. I'm really excited to be here and be doing this with this group of women. I actually worked in the hospitality industry myself for over 10 years in New York City and in Massachusetts. So I'm really familiar with a lot of the things that everyone in this audience, I would imagine, are going through right now. And my boyfriend also was a waiter at a restaurant in New York until March of last year when the restaurant stopped serving temporarily. So have somebody in my household who's been going through the unemployment rigmarole and trying to figure out next steps and adjust and change. So I definitely hear the pain that has been happening the past year, and I'm happy to answer any questions or concerns or thoughts about any of that. I mean, we know from a lot of surveys and data and things out there that this pandemic disproportionately has affected women, and particularly communities, women of color. So we want to really think about how do we support our communities, how do we support women together, how can we come together and learn more and share more. And a lot of times when we talk about personal finances, we're really thinking about this is about me, right? It's about me, it's about protecting myself, but a lot of times it's also about protecting your community, thinking of new ways to support each other, thinking of new business ideas and hiring friends and colleagues. So I want to just put it in that framework of personal finance doesn't have to be just about me. It really can be about the change that you want to see for yourself and in the world. So I'm going to share my screen and share the presentation. Give me just one moment to do that.
Thank you for that. That was just a really great statement. So really appreciate that you brought that to the forefront for all of us.
Of course. And let me make this full screen. All right. So I am a level 3 financial trainer at the Financial Gym. I've been at the gym for about 2.5 years. I work with everyone. I work with individuals. I work with couples. I work with business owners. I work with lots and lots of freelancers. I work with people who have filed for bankruptcy 3 times, and I work with people who have $8 million in the bank. So I always tell my clients as I meet them, there's nothing, a lot of us have fear and anxiety and stress about our finances, and it's hard to think about talking about them with somebody new. It's hard to think about sharing numbers that maybe you don't even know, never mind sharing them with a stranger. And so as we go through the presentation today, I want to offer to you to ask questions that may seem a little bit personal in nature or may seem a little bit scary, and just let you know that from where I'm sitting, there's no judgment. I've seen it all. And we're all going through different things at different times, and we can all support each other through that. So I want to feel comfortable there. In terms of what we're going to actually talk about in the material for today, I want to talk through the pros and cons of starting a business. There's a lot that goes into starting a business, and entrepreneurship is really this kind of hot button, hot ticket, cool, sexy item right now. But we want to make sure that when you plan anything, whether it's starting a business or making a big switch career-wise, that you know what the financial implications are and that you're working around those. Then we're going to talk a little bit more about the personal financial journey, where you're going, what you want to do, how you want to save, how you want to prepare, and then what that means in terms of bringing that into business formation and starting a new idea and putting that out there. We have a lot of resources. There are so many amazing, there's really an explosion of fintech apps and business apps that make creating a business a much lower lift than it was historically. So there's a lot of stuff out there. I have a couple of them that we recommend, but there are many, many others as well. So we'll talk about a couple of those. So why are we starting a business in the first place? Like I said, it seems like everybody wants to be their own boss right now. Everybody wants to create something new. We have this idea of income working for a company or working for a restaurant as being finite in a sense, right? You get your salary or you get your hourly wage plus tips, and especially in times of economic downturn or depending on where you're working or who your customer base is, those may be not enough to sustain where you want to be and what you want to do with your finances. So this idea of entrepreneurship and creating your own business is really about, the sky is the limit in terms of how much money I can make. And that is so exciting, and it's amazing and it's empowering, but it puts a lot more pressure on your plate to actually make that money. And so we have also this exciting idea about like lifestyle control. I can work when I want to. I can work from wherever I want to. I can have a 9 to 5 if I really want to, or if I'm a restaurant person and I love working nights, I can work at 6 p.m. until 12 p.m. and be a night owl and feel amazing about that. And also, I can have this moment of creativity. I can really think about new ideas, new products, new services. I can brainstorm. This brings a lot more different types of skills and different types of exciting tools and ideas to the table. So almost anyone you ask is going to have an idea for an amazing business that they'd like to see. But the practical piece is the next part. So what is the reality of starting your own business? One is, like I said, that pressure on yourself. I now am the only way that I'm making money. I can't phone it in at work in the morning. I can't take 2 weeks off and know that I'm going to still get a paycheck. It can be really stressful. It can be scary to put a product out there. You feel like your reputation might be on the line. You feel like it's really hard to make cold calls or reach out to new clients or investors or networks. You may not be able to bring in money for quite some time. I have clients who have left their current job and had money coming in right away. And I have clients who left their current job and a year and a half in, we're still barely breaking even. So you want to be really prepared for that. And then another piece of the sleepless nights and the working all the time, right, is you're so focused on your work and your passion and your project that you're losing these other parts of your life, friends and family, being able to have a beautiful dinner out that's maybe a little bit more expensive, feeling confident about what you're doing. Some of us experience uncertainty or fear or rejection, and that continuous cycle of rejection over and over can be really disheartening, can be really depressing, can be really overwhelming. So what we need to do in this case is A, set yourself up for financial success, and B, really create a community of other people around you who are doing the same thing, who can support you. There are tons of amazing women's networking and entrepreneurial communities in New York City, or if you're not in New York City, across the country. There are groups on Facebook that I have clients that connect with in their particular industry. There are organizations that do lots of amazing events like this one. I'm sure SpeedRec has a number of other programming opportunities for you to connect on. But it's really important to build that community, and it's really important to use that community to learn about other ways that you can build wealth and other ways that you can get through these really tough times. So that all to say that we want to be strategic about, having a project that you're really passionate about, that you really love, so you can get through the hard times, so that you can get through the downturn, so that you can make it through nights of sleeping on your friend's couch or your parents' couch because you don't want to pay $2,000 in rent. You'd rather put that into your business, right? And we can also get through it by being prepared financially before you take that leap of faith. So before you even start thinking about freelancing or starting your own business, we really want to make sure that you have a solid foundation underneath you financially. And that first piece is having an emergency fund. And the emergency fund that we talk about is like 3 to 6 months of your expenses, right? So having that, when you do the calculation of I pay rent, I pay utilities, I pay for my car or for transit or my phone or particular subscriptions, I pay for groceries, what's the least amount of money that you need to spend every month that you can be comfortable with? And then we multiply that by 3 or 6. Now, that's the number that we're trying to hit for people who are working full time, people who have a regular paycheck coming in, people who are expecting money. When you're starting a business, we extend that number really to 9 to 12 months. Why? Because you're likely going to have to pour more money into your business in different ways, whether that means, more coffees out to meet potential investors or potential colleagues or support systems, whether that means actually buying particular systems, spending money on coaching, spending money on business planning, spending money on an accountant or a bookkeeper. We want to make sure that there's extra money for those kind of things. And then we also want to know that sometimes it takes quite some time to start seeing that money come back at you. And we want to be prepared for you to be able to take that 9 to 12 months to really focus in on your idea, to really build your business, to really put yourself out there, because sometimes it can take some time for that energy and that work to return. So basically what we do with clients who are moving to that freelance lifestyle is we have all this money in savings, and rather than kind of pulling from savings piecemeal or willy-nilly as you have expenses come up and things that you weren't expecting, and then you had a big dinner and it was your mom's birthday and whatever, you set your budget. That budget is your fixed expenses. That budget is some room for variable things like groceries and dining and birthdays and friends and travel, etc. We want to keep it minimal, right? So you don't have to save too much money to get to that 9 to 12 month mark. And then once you have that money in your savings account, you want to create a paycheck. So we know exactly what that amount is that you need every month to make your expenses work, to cover your bills, to pay for food, to have a little bit of room for pleasure. And if that, let's say it's $3,000 a month, and that's what you need, we take $3,000 a month out of your savings in one chunk once a month. We put it in your checking account, and that's what you have to work with. And if there's $0 left in there, we're spending $0. That way, you know for sure that you still have, 11 months remaining because you took $3,000 out, but now you still got $33,000 sitting in that savings account. I find that when people don't do that, when they just kind of pull money out as it goes, then the money disappears. And all of a sudden, after 1 month, you thought you had 11 months left, but you actually only have 9 because things kind of came up and you weren't on top of it. So we want to save that 9 to 12 months of expenses if possible. And then we want to have a very specific plan for moving that money that you've budgeted on a monthly basis from your savings account to your checking account as if you were getting a paycheck from an employer. Now, in terms of getting the actual business started, there's a number of different directions that you can go. So there's a lot of people feel like, okay, I'm starting a business and therefore I have to be an S Corp, or I have to be a C Corp, or I have to have an LLC, and I have to spend money to have a lawyer to write up all of these documents, and I have to get it certified, and I need an EIDL number, and I need a business checking account and a business savings account and a business credit card and a business loan and all of this stuff, right? The reality is most of you do not need that. At least you don't need that at the beginning, depending on the product or service that you're offering. So I think the next slide covers the entity structures, but basically the most basic structure is just the sole proprietorship. And what a sole proprietorship is, here we go. What a sole proprietorship is not a formal business structure. So you don't have to go to a lawyer. You don't have to spend $800 to set something up. You don't have to pay all the fees for the state. You don't have to have all these particular accounts. It's just you. It's you as a freelancer. It's you as a business owner. It's not a legal entity, but that doesn't mean that you can't sell goods or offer services and get paid for those things. Now, it doesn't protect you in the case of a personal lawsuit, or it doesn't protect your personal assets. But if what you're selling is something that, the likelihood of a lawsuit is pretty minimal, it's not a huge deal to be a sole proprietor versus an LLC. The ability for that LLC to really protect you is actually on the minimal side, and you're spending a lot of money on that anyway. When you file your taxes as a sole proprietor, you're doing that as an individual. So you'll have your regular tax return, and then you'll also have something that's called the Schedule C. And the Schedule C is an additional form where you put in your business expenses, and you can deduct those expenses from your overall income for that particular tax year. And that connects with your personal financial information on your tax form. So pretty simple, really nothing that you have to do. You call yourself a business, you give yourself a name, you can operate as that, that's it, the end. And it makes it really simple to get started, right? Then a lot of folks are like, okay, well, I need an LLC because I need an LLC to feel like I'm an actual business owner. If that's the reason you're opening an LLC, don't do it. The LLC is really because you're worried about the protection in the case of a lawsuit, or because you need to have a legal business entity structure because you have partners in your organization. You're looking at anywhere from like $800 to $1,500 to get it set up. And it's the setup process and the paperwork can be pretty time consuming and overwhelming. That said, it does give you that protection. It does give you that like formal quote unquote legitimacy. If you ever look at somebody's, a small business's website, very rarely do you actually go through and say like, oh, is this an actual business? Is it an LLC? Do I feel comfortable buying something from them? Do they have this kind of protection? It's really more of an internal piece. And if you have the money beyond what you save to cover your 6, 9 to 12 month year of expenses, by all means. But if what you're doing is kind of struggling to make your expenses work, this is probably something that you can wait on.
So we have one question here, Georgina. At what point would it make sense to transition from a sole proprietor to an LLC?
I think that the question that you have to ask yourself first is, the LLC is the most basic business structure, but like, is that the most advantageous for you? Because there actually are a couple more on the next couple of slides. So there's an S Corp, there's also something called a C Corp that give you other benefits. And you don't want to go through that formation multiple times. So you want to have a really good sense of like how big you want to grow your business, if you want employees, if you have particular goals around how you pay yourself, or if you want to eventually become a publicly funded company. And so these things will all affect your ultimate decision in terms of what business model makes the most sense for you. And you can talk to a CPA about that to get a little bit more information. But basically, an LLC would be, I have my business checking and savings connected to a particular account. It has a business name on it, versus me having a business checking and savings connected to my personal account that has just my name on it, but I call it business savings and business checking. That's really the difference between the LLC and the sole proprietorship in terms of like the practical day-to-day, right? Is that these accounts are specifically under the business name. With an S Corp, things get a little bit more complicated, but there's additional tax savings benefits to opening an S Corp. So an S Corp offers you a way to reduce the taxes on your income because there's two ways to pay yourself. So there's one portion of the way that you pay yourself or you pay any employees is by running payroll. And when you run payroll, you have to pay payroll taxes on the amount that you're paying out to your employees, right? And then when you pay yourself through payroll, the money that hits your checking account already has the taxes taken out of it. So that you have to set up a system, you have to pay for the system. And then secondly, you have the ability to pay yourself as a business owner. So you do what's called a distribution, and the distribution is actually taking a chunk of cash of a particular amount out of your business and just dumping it into your checking account. And that's almost like if you thought about a business as having investors, and the investors get like a certain amount of cash out of the business when the business does well. If you're doing really well with your business and you have extra cash in your checking account and you're like, you know what, I have coverage for my business expenses for a couple of months, not super concerned, everything is really consistent, this feels great, I'm going to give myself a bonus. You can do it that way. So with an LLC or sole proprietorship, it's just a transfer from whatever business account is to your checking account, and all of your income is taxed. All of your business profits are taxed in a similar way, where it's all coming into the same tax return, it's all considered personal income in some capacity. With this, you have this extra layer, but because you have that extra layer, you can reduce your tax obligation slightly by kind of mixing and matching how much you pay yourself via payroll versus how much you pay yourself via a distribution. And this is getting a little bit more complicated. And I don't know how relevant it is for everyone in our audience, but the point being, to the question that you posed, Lynette, if you are just so early in your formation of the business and just trying to figure it out and trying to build a minimum viable product and get your name out there, get your product out there, get your service out there, doing any of this, I wouldn't jump in and do it. I would give yourself till you're actually like making enough money to support yourself and support the business. And at that point, if you're covering all of your expenses easily, then it maybe makes sense to dig into some of these other things because they're just a bit more expensive and time consuming.
Yeah, I think this is really relevant for a lot of the people in our crew, because some of them are starting things like events where they do have to pay people. So this is a great, just seeing all three is really good for our audience.
Gotcha. Keep in mind too that when I'm talking about payroll and paying yourself as an employee, and if you have employees, I'm only talking about actual employees on the books. So if you have contractors who are helping you with something, that is just a business expense. And the way that you would treat that with an S Corp is the same way you would treat that with an LLC, which is you're paying them whatever hourly rate you agreed upon, and that person is responsible for dealing with their own taxes. So it's just like the difference between paying a contractor and paying for a rent in terms of how it's viewed as a business expense is the same. Where if you're hiring folks and you're paying them as an employee, you probably want more of a formalized corporate status. The S Corp also protects personal assets in case of a lawsuit. It's a little bit more expensive than an LLC, but generally the benefits outweigh the additional expense. Any other questions on those topics before I move on?
No, I think that was it, unless anyone else has any deeper questions on that.
Great. So to your point, what's right for you, it's understanding what level of protection you will need, what the costs are to incorporate if you're going to have partners, what the industry standards are in which you operate. So just to give you actually an example, so I have a number of clients who are therapists, and they do need to do the LLC. In fact, they need to do a very particular structure of the LLC because there's additional liability built in to that kind of a business, right? So if you're in an industry where there is a lot of risk, where you need additional insurance in order to run your business, then you may want to consider a more formalized structure earlier in the game. Cool. So we talked about the structures, then the business bank account. So if you're a sole proprietorship, you're probably just going to open business bank accounts under your own name. So rather than just having one checking and one savings, or 5 checkings and however many accounts you have personally, open a checking and a savings that are specific to your business. And those can be with whatever bank that you already use. If you're an LLC or an S Corp or something else, then you're going to want to open an actual formalized business account with your business name on it. Typically, business accounts with a big bank like Chase or Bank of America come with a lot of extra fees, because they assume that because you're a business, you're making more money, they can charge you more to operate. So one thing to be careful of is when you're choosing which bank to go with for your business accounts, you want to look for what the fees are, what the fine print is, what additional things they're going to charge you. Sometimes they have a requirement for a certain amount of money deposited into the account every month. So if you're starting from scratch and you're not expecting a lot of revenue initially into your business, you want to be really cautious about that, because you don't want to pay for an account just for the sake of having it, right? The second thing is, no matter what kind of company or organization you're building and what the legal structure is, you want to separate your business expenses from your personal expenses. So a lot of times when people are starting a business, they're kind of, everything's in one place, or maybe you don't have that much cash on hand and you're like, well, let me just pay for this with my checking account and I'll pay for this with my credit card, and it's all mixed up. In terms of accounting and bookkeeping and understanding what your business expenses are and projecting that and knowing how to manage your business finances big picture, you're going to really want to have all of the business expenses in one place so that you can see them really easily, and all of your personal expenses in another place. It makes it much, much more complicated on a tax basis, and also just for your own sense of control to have everything in one place. So we want a separate business account, regardless of whether it's under a personal name or a business name. And you also want a separate savings account. And so these are a couple of different options: Nova Bank, Axos, BBVA for free business checking accounts without monthly fees. There are a bunch more out there. These tend to be online banks. And the benefit of the online bank or the apps, these kind of like banking app products, is that often they don't charge fees and they have a lot of benefits as well, because they don't have that brick and mortar expense, right? So they can kind of pass on the savings to their customers, and they're interested in their customers being successful, because as a bank with a banking structure, they want you to have more money in your accounts. That helps them succeed. So if you make money, they make money, and that makes them happy. And then, like I said, you want to be really careful about service charges and additional fees. So that's your business banking accounts. Once you have those business accounts set up, then you want to think about the business budget itself. So we talked a little bit about your personal fixed and variable expenses of like rent and utilities and phone, et cetera. Business expenses are really going to vary depending on your product. And there's actually three things that are coming into play here. So the first thing is the fixed expenses, which might be a website domain hosting fee. It might be an office rental. It might be particular subscriptions that you're using on a regular basis. It might be an accountant or a bookkeeper that you're paying on a monthly basis, etc. So we're going to add up all of those expenses, and then we want to understand the variable expenses, which are the things that you want to put into your business, the investments in growing your business. So that could look like a virtual assistant. It could look like a networking group. It could look like coaching. It could look like a course. It could look like subscriptions that help you save time to do social media posting or things like that can do it for you automatically. It could be one-off stuff like recording equipment or fitness equipment or bar tending equipment, right? And then the third thing that we don't see here actually is something called cost of goods. And cost of goods is if you're offering a product and it costs you money to get the materials to create the product before you sell them. So let's imagine you're opening a bar and you have to fill the bar with alcohol, right? And you need mixers and you need juices and you need citrus and you need sugar and you need all of these things. All of those are things that you have to pay, and they're not fixed expenses because it's not the same exact amount every month. And it's not really variable expenses because you always have to pay for it, but it's something called cost of goods. And the cost of goods is usually like a percentage of how much money you bring in every month. So for example, I was just working with a client who has her own skincare company, and her cost of goods is about 40% of her total revenue. So she sells, lotions and facial products and things like that. She gets, $80 per purchase, let's say, for example, and 44% of that $80 is just the cost of her getting those materials together, having somebody mix the formula, putting it in a jar, sending the jar, et cetera, et cetera. So that's the first piece that you're seeing with the expense. And that can be really hard as a new business to start up with, because you have to have all of this money up front to just even make that happen. And you want to be really careful of those expenses and keep them as low as possible so that your potential for profit is larger. So in the restaurant industry, the profit margin traditionally is really, really low. In bars, it's a little bit higher because you can charge a premium on alcohol. But for food, the cost of the food is so much already, and the cost of the labor and the cost of everything else, that your margin in terms of what extra money you're making on top of just the expense of the food itself is pretty small. When you add on the fixed expenses and you add on the variable expenses, then that number gets even smaller and smaller and smaller. So we want to be really cautious of, what are you spending on? Are you spending on things that are really meaningful? Are you spending on things that are going to actually grow your business? And if they're experimental, let's say you're spending on something like advertising or marketing, you want to have a really clear picture of what you're trying to get out of that advertising or marketing. So let's say you want to put $2,000 into Facebook ads and other social media ads. How many new clients are you hoping to sign up through that at a minimum in order to justify that cost? Or how many what's the number of products that you want to sell based on that advertising? And you want to have that in the back of your mind so that as you try these different things, as you invest in your business and you put money in, that you make sure that you're actually getting a return on that investment and that you're understanding what that means for you. So all of these expenses can get really complicated. They can get cumbersome. They can get confusing. As a business owner or even as a freelancer, you want to make sure that you are doing a really good job with bookkeeping. And bookkeeping is understanding what money is coming in, what money is going out, what the categories are for that money that's going out, what the frequency is, what percentage, for example, your cost of goods are, what amount your fixed expenses are, and also just to help with the actual counting at the end of the year in terms of taxes. So as a freelancer, and sometimes depending on your business as a small business owner, you're going to pay taxes more frequently. So the IRS has a requirement that every quarter, if your taxes are over, your taxable income owed is over a certain amount, that you have to pay estimated taxes. And if you don't, they can tack on a nice big fee or fine for you at the end of the year when you file your taxes. So freelancers for sure, small business owners generally, if you have an S Corp or a C Corp, that becomes different because the taxes are encapsulated in payroll and in sales tax and other things. But for most folks, being aware of taxes, being ready to file those taxes, having a really good idea of what your estimated income is going to be important to keep that process as simple as possible and not to overwhelm you. There's a ton of different software applications out there that you can use to input your expenses, that will link to your accounts, that will automate the output for you, that you can see very easily what you're spending on. Some of them are a little bit more complicated than others. For example, QuickBooks is kind of a gold standard. A ton of businesses use it. To get into QuickBooks and understand it and set it up and do it right, it can take a little bit of time. They have a lot of free courses and resources and ways to learn on their website. But it's a little bit more complicated, where like Wave accounting, for example, is a little bit simpler. Freshbooks is similar to QuickBooks, but I think a cheaper, if not free version. And then there's always the good old spreadsheet. So I set up spreadsheets for most of my business clients who don't already have a software application that they're using. And what we look at is what their revenue is, what their percentages are in terms of cost of goods, what their expenses are. We estimate their taxes, and then we can estimate from there how much they can actually pay themselves on a monthly basis. And so you can do it. You can do that really easily. There's a ton of templates out there if you Google them, but you got to be on top of watching the numbers and seeing what's changing, because if you don't, you won't know how you're growing and how best to continue growing. taxes we just talked about. So in terms of the tax liability, you're usually looking at somewhere between 20 to 30%, depending on how much money you make per year. So no matter how much money you're bringing in, whether it's $5 or $5,000 every month, you want to make sure that you're setting aside a portion of that in a savings account. This is a separate business savings account that's for taxes, separate from like any other business savings goals. If you want to have a couple of months of expenses saved in your business, if you want to save to do a new advertising campaign or to rebrand your product or to take an amazing course with this brilliant instructor, you want to keep that all separate from the money that you're saving for taxes. And the money that you're saving for taxes is sacred. You put it in there, you leave it, you don't touch it. And so that 20 to 30% is based on obviously the state that you live in, because some states have income tax, some states don't, some states have higher rates, some states don't. And then also where you fall in the federal income tax brackets. So that'll depend on your annual income. For a particular year, you may not know that yet. So a safe number to assume is somewhere between 25 and 30%. So every time you get revenue, the way that we calculate the taxes that you owe from the business is the revenue comes in, we deduct your cost of goods, we deduct your business expenses, and then we calculate that 25 to 30%. So we're not calculating the 25 to 30% just based on the money that's coming into your account. We're calculating it after the fact because all of those things you can reduce your taxable income. So that's the number. You want to either automate it if you can, or if you can't do that, make sure that at the end of the month, you're sitting down with your spreadsheet or with your software and you're saying, okay, what was my total revenue for the month? What were my total expenses? What are my costs? Out of the amount that was remaining, I'm going to set aside that 25 to 30% for taxes. Beyond that, if there's more money beyond that, then that's my income, or a portion of that is my income and a portion of that is the money that I'm reinvesting in the business or using for one of the particular goals that I have to grow. I talked about the estimated quarterly taxes. So you want to make sure that you're planning to do that if you're a freelancer, if you think that you're going to have that tax obligation. And then as a business owner, you always want to have a great bookkeeper if you're not doing it yourself. And you always want to have a great accountant. And accountants can vary across the board. Some of them are very, kind of cut and dry, and they're like, give me the information and I'll figure it out. Don't talk to me, don't ask me questions. And some of them are more willing to engage with you. So you really want to try to find the right person or the right fit, because this is a long-term thing. And it's really important that your taxes are being done properly. So having somebody who's willing to engage with you, who's willing to answer your questions, who's willing to work with you to understand the best opportunities is going to be invaluable in the long term. And the thing that I hear most often when we talk about taxes is like, oh, my accountant's really weird, or I don't trust them, or I feel like they don't understand what my finances are. They won't answer my questions. So if you have friends or colleagues who have accountants that they love, ask around, make sure you're connecting with the right person. And then these are a couple of our resources that we like to use for very simple business practices. So Asana is a really fun project management tool or task management tool. You can engage other people, whether they're employees or consultants or partners that you're working with, to manage deadlines, to adjust projects, to do project planning. Freshbooks as a free way to send professional invoices and do your bookkeeping. Expensify is nice if you're reimbursing yourself for business expenses. Hopefully you're not reimbursing yourself for business expenses because you're paying for them out of your business accounts. But if you have contractors or folks like that where you need to pay them back, or if you need to just manage your receipts, that's a great tool to use. And then, Google Drive is kind of ubiquitous, but you can keep everything together in one place. It's important that you have access to your documents no matter where you go. You want to be sure that they're secured, they have pretty good security protocol, etc. Those are just a couple of initial ones. There are thousands more out there that I could share with you, but I don't have any other ones top of mind right now.
I was going to say, you mentioned Wave earlier, and that I found useful for anyone in the audience who has to send international invoices as well.
That's
Sometimes
good to know.
yeah, sometimes we have clients, it won't let you do the paying options necessarily, but it will let you change the currency. So I think sometimes that might be something in our industry where that happens if, the client's based in the UK, where their spirits company is, et cetera.
Great idea. Thank you for sharing. Let's see, moving on to retirement. And so retirement gets a bit more complicated when, not retirement itself, but saving for retirement gets a bit more complicated when you work for yourself because your options change. So the most basic, simple option that you can do for retirement is called a traditional IRA or a Roth IRA. And an IRA is an individual retirement account. You open that separate from your business. It has no connection. So whether you're employed full-time or you work for yourself or you don't work, but your partner works, you can still open an IRA. Now, the cap in terms of what you can put into an IRA to save for retirement every year is only $6,000. And that's $6,000 between a traditional account or a Roth account. And I'll go into what the difference is between those later. But suffice it to say that $6,000 is the maximum that you can put into an individual retirement account per year. Now, that's great if you're just starting out and you're like, okay, I just want to start by contributing $100 a month or $200 a month. But if what you're really doing is trying to maximize your retirement savings, $6,000 is not going to go a long way and not going to be enough for you to hit ideal retirement goals unless you already have a fair amount of savings or your expenses are like nothing. So first place to start is the traditional or the Roth. The difference between the traditional and the Roth is the way that the money is taxed. And so a traditional IRA is a pre-tax account. Now, obviously, as a business owner, most of the time you're paying taxes yourself. It's not coming out of your paycheck. So it's not like you're getting money in your account that's after tax money, and then you can use that to put excuse me, it's not, you're putting money into your account. That money is pre-tax money, and then you're paying taxes, right? You're paying the taxes estimated quarterly, ideally, or at the end of the year, but you're paying the taxes out of your business tax savings account. So the money that you're getting in your personal account that you're paying yourself is money where you've already kind of deducted the taxes and put them off to the side in a sense. If you put money into a traditional IRA, because it's a pre-tax account, you basically get a deduction on your taxes of the amount that you put in that account. And a deduction doesn't mean if I owe $5,000 in taxes and I have a $6,000 deduction, I'm getting $1,000 in my pocket at the end of the year. What it does mean is my overall income for the year was, let's say, $100,000. I can subtract $6,000 from that. Now my overall income from the year was $94,000, and my tax rate is 25% of $94 rather than 25% of $100,000. So I'm saving 25% of that $6,000. I'm not saving $6,000. But you're still saving something, and something is better than nothing. So the traditional IRA, you put $6,000 or some amount below $6,000 in there every year. When you file your taxes, you tell the IRS, hey, I put this money in, please deduct that from my overall income for this year. So I'm saving the money in my taxes in 2021, not in the future. The Roth IRA is the opposite. So you put the money in, you don't have to tell the IRS anything because you've already paid your taxes. It's not a tax savings now, but when you retire in your 60s and you take that money out of your Roth IRA, you don't have to pay taxes. Versus with the traditional IRA, you didn't pay taxes on it now, but when you take it out in retirement, you have to pay taxes then. And the benefit of the Roth IRA is, as a low income earner or someone who's just starting their business, who's anticipating making a lot more money later on in life, your tax rate right now is probably much lower than it will be. And so you're saving money by paying taxes now at a lower tax rate than what you would have to pay later on in the game when you make a lot more money or you actually need a lot more money to live in retirement. So the Roth IRA is the ideal first place to stop if you make, as an individual, under $130,000 a year. If you make more than $130,000 a year, there's an income cap in terms of who can contribute to a Roth IRA. And at that point, you'll want to try the traditional instead because you won't be able to contribute anything to the Roth. So that's the first place that you go. That has nothing to do with your company. It has nothing to do with whether you have any employees. It doesn't have any implications in terms of if you were to dissolve your company or rename it or expand it, it would change your retirement. No, this is all just yours. You can carry it with you. It's there forever. The other options are a solo 401k or a SEP IRA. There's also something called a simple IRA. And these are different structures that are based on your earnings as a company. So for example, the SEP IRA allows you to put pre-tax contributions into this account based on a percentage of your business income. So if you're a freelancer, that is about 20% of your business net income. So if you look at your business net income is your business revenue minus your expenses and costs of goods, and 20% of that number you can put into your SEP IRA every year, which is a lot more typically if you're a growing business than the $6,000 that you're allowed to put into a traditional IRA or a Roth IRA. So this gives you a lot more leverage. Now, if you have employees, it gets a little bit more complicated because if you're creating this SEP plan where you are contributing to your own retirement, you also have to contribute to their retirement. And you may or may not want to do that for different reasons, for tax reasons, or because you don't have the financial capacity to make that contribution for your employees. I always think it's really important to treat your employees well and to be thoughtful about that. But for some folks, it's, you just don't have the capacity initially. So that can be a longer term decision. And if you've set up a SEP IRA for yourself today and you hire employees 6 months from now, you either are going to have to change that account completely or you're going to have to start contributing for them. So you want to plan ahead with that. Same idea with the solo 401k. The solo 401k is a little bit different because that one you have to be a solopreneur. Basically, you can't have any employees if you want to contribute to that. And the 401k option allows you to put $19,500 per year maximum into that plan. And it's also pre-tax typically, but you could also do a Roth 401k, which would allow you to do it after tax. And the benefits and the drawbacks of each of these accounts is based on what the requirement is for employees, what the requirement is in terms of fees to administer that plan. So the 401k plan is typically much more expensive than an IRA plan in terms of just the administrative costs of opening that account. And then there's also fees associated with the investments that you're making in your retirement account. And the fees typically with a SEP IRA are much lower than the fees with a solo 401k. So the solo 401k is a little bit more streamlined. It gives you the opportunity to build that into your business and run it through payroll to simplify everything, but it tends to be a bit more expensive than the SEP IRA is just much more simple. So again, here, talking to an accountant about your particular situation and what is right for you is going to be important before you set anything up. And even once you set something up, checking with your accountant to see what your contribution should be for a particular year, because if you over contribute to an account like a SEP IRA, you can find that you get a lot of penalties at the end of the year. So you don't want to contribute $1,000 a month and then you get to the end of the year and you're like, oh, I over contributed. I was only allowed to do 24,000, but I didn't exactly know what my income was going to be, and it was less than anticipated, and now I have to take the money out, and now I have to pay a 10% penalty, and on top of the 10% penalty, I have to pay income tax, and on top of the income tax, I have to pay capital gains tax on my gains. So it gets really expensive and complicated. So for a lot of folks who are freelancers or self-employed and that are in those initial stages of building their business, I'd recommend, rather than putting the money into the account right away until you have a clear idea from your accountant of how much you should be putting in, set up a transfer into your savings account every month and save that money so that at the end of the year, you can make a one-time contribution for the maximum amount that you either have saved or that you're able to contribute, so that you're not doing that ahead of time and then having to undo it later. Other things, health insurance. Health insurance becomes an expense that you have to pay for if you work for yourself. For a lot of folks who work for restaurants, you have to pay for that anyway yourself. So it's not going to be a new thing. There is a state marketplace. New York State has a marketplace. All the other states have a marketplace. It sometimes is a bit more expensive than you'd like it to be. So there are certainly other options private options that are sometimes a little bit cheaper depending on how much you were making the previous year. If you're really on the lower income side, Medicaid could be an option, or sometimes there are healthcare sharing ministries out there that can help cover a portion of that cost. I think we've seen with the pandemic how important it is to be insured and to have an opportunity to have regular health checks. So even though there isn't anymore a requirement that you have to have health insurance or else you pay a penalty, it's still a really good thing to have. The other thing is you have the opportunity to do COBRA if you were with an employer full-time that was offering an insurance plan and you were terminated or left. And so if that's the case, COBRA gives you the option to continue with the same plan that you had before, but you have to pay the entire premium. So usually prior to leaving a job, your employer was paying a portion of that. Now that expenses moved on to you. So if you were only paying $100 a month out of your income towards it and they were paying $500, now you're paying $600. So it often is very, very expensive because the plans are a bit more comprehensive than the low cost plans that you might get on the state marketplace or through a private insurer. But sometimes depending on your needs and what kind of appointments you go to and who's in network and who's out of network, it still can make the most sense. So something else to consider there. Last thing, so there are a lot of other expenses that you don't think about when you become a freelancer or a business owner that you had covered if you were working full time and you don't anymore. So again, for folks in the hospitality industry who are working hourly, a lot of times you didn't have paid vacation. But if you did have paid vacation, keep in mind that as an employer, as a business owner, as a freelancer, there's no such thing as paid vacation. So if you want to take vacation, not only do you have to save money to actually do the vacationing that you want to do, but you also have to save enough money for you to pay your bills during the time that you're on vacation and for you to spend on regular things like groceries, etc. So rather than saving $250 a month to have $3,000 a year that you can go on a tropical vacation and lay on a beach, you're going to want to have like $5,000 or $6,000. So you're covering the cost of, a quarter of your month of income if you're going for a week, or half of the month of your income if you're going for 2 weeks. Or really, I usually have people assume 4 weeks. So you have kind of a flexible vacation policy that you create for yourself. So if you know you need $3,000 a month to pay your bills and live, we want to save $3,000 just to take that month off, and then another $3,000 to do fun things in that month that you wouldn't normally spend for. So keep in mind additional expense that you have to contribute to, in addition to thinking about wanting to do a little bit more in retirement, especially since if you were working full-time for an employer that matched you previously, you're not going to get a match. So it takes that much more time to save up. And then the health insurance that you're going to have to pay. So these are 3 big costs that if you take the leap of faith from working with a full-time employer and you jump into starting your own business, you need to factor into your budget and expect and anticipate. And there's a great app that helps freelancers and business employers to plan and save for some of these called Catch, which I haven't actually used, but some of my colleagues love. And then a couple more resources here in terms of funding. So Fundera.com and SBA.gov. Fundera.com is more about funding your business at a low level. SBA.gov, that's where you're going to go for all of your federal loans. So if you want to get a business loan, if you're applying for PPP, if you want to take advantage of an economic disaster loan, SBA.gov has all of those loans. The applications are there. They're going to be able to sponsor those. They're typically lower interest and longer term than a private loan might be. So if you needed to invest in your business in some capacity and you don't have the cash on hand, going to Chase Bank is going to be often much more expensive than the SBA. But the SBA has particular requirements in terms of revenue and in terms of your business than Chase might have, because they're hoping to help folks who really need it, where Chase is hoping to make money. So kind of a difference in terms of their mindset and what they're trying to do. There are tons of Facebook groups, as I mentioned earlier, for freelancers and solopreneurs. And then bench accounting, if you need bookkeeping or you need low-cost accountants, they're a good tool that's a little bit lower priced and a little bit more flexible. So great place to look. And that's all I got. And we're just about at 2:00, but I do want to leave time for some questions and thoughts.
It's great. I know we have some business owners and people starting initiatives who were in and jumped in. I think one question I have, I think, which might be good for some people here, can you have a personal retirement account and a business one once you're kind of, you start the second company? Because I know if you're a freelancer, it feels a little weird if you're an S Corp or you're even just a sole proprietor. Are those two things considered different in the eyes of?
Yeah, they're definitely not mutually exclusive. If you have retirement accounts from old employers or you have IRAs that you started in the past, you don't need, like, they don't compete against your new retirement account. So you don't necessarily need to roll over your old accounts into your SEP IRA or solo 401k or even an IRA if you don't want to. We do generally recommend that if you have old 401ks from a former employer, that you do roll those over into an individual retirement plan, because the employer pays the administrative fees, right? So when you leave, or if you get let go, they often stop paying your administrative fees. And now that money is coming out of your account, and you don't want to have to pay it if you don't have to. So an IRA is going to have much lower costs to open and to maintain the money in. So that's the preference if you have old accounts. If you wanted to start with a Roth IRA and then like maybe add a SEP IRA or a solo 401k or a simple IRA or something else later, you can definitely do that. I think, and don't quote me on this, I think the traditional IRA is separate from the SEP IRA in terms of the contribution limit for the year. But if you're contributing to the SEP IRA or a solo 401k, the traditional IRA contribution would be not tax deductible. So kind of doesn't make sense to put money in a traditional IRA if you're creating a separate account for yourself through your business. A Roth IRA doesn't compete with that because the taxation is different. So you can do $6,000 in your Roth IRA and $40,000 in your SEP IRA and be good in the same year.
Great. Does anyone else have any other questions? I think everyone's furiously writing down. I think this is super comprehensive. Definitely the best explanation I've heard of all the different kinds of entities you create to start your business, which is very helpful for everyone. And can they find you at the financial gym if there's questions that come later?
Of course, they're welcome to reach out if folks are interested in signing up for the financial gym. You can go to our homepage and there's a link to schedule a warm-up call where you can talk to one of our callers for 15 minutes and they'll set you up with a trainer. If you want to particularly work with me, you're welcome to request me. If you have a one-off really quick question and you just want to reach out, feel free. My email is georgina@fingyms.com and I will see what I can do.
Well, excellent. Thank you so much for your
me.
time and for putting this together. This was really great. And thank you to everyone for joining, and we will keep this all in mind. So thank you so much for being here. And we're super stoked to share this. And I'm sure lots and lots of people will have questions after. So, all right. Thanks so much, everyone. Have a great rest of your day.